Hello, friends. I hope you all are doing great, and I welcome you to this amazing session. And our session has started. So, now I'm just looking at your chats. If you can hear me, please just give me a message over here in the chat. And also, if you have any questions, you can ask me over here. So, let's look at who is coming here. Hadi Bhutta ji. Hi Hadi Bhutta ji. Sunil ji, hi, hello. Muhammad Sheroz ji, assalamu alaikum. Walaikum assalam, Sheroz ji. Can you guys hear me? If you guys can hear me, please let me be informed if you can. Okay, so everybody can hear me now? Hi, okay, today is your first day? Okay, loud and clear. Thank you so much. Thank you so much. Walaikum salam, walaikum salam. Shams Buneri ji, walaikum salam. Okay. So let's go get started over here, guys. First of all, salam, namaste, sasrikal, and good evening, good afternoon, good morning, wherever you are in the world. I hope you guys can enjoy this amazing information session which we are going to have shortly, and I think today we are going to enjoy pretty much more, because this is gonna be a very important topic of your trading life. If you wanna understand the ins and outs of trading, you got to understand three things in total. Number one, you got to understand your strategy. So you got to understand your strategy, which we have discussed very well. So we have already discussed our strategy in details, in a lot of details, in previous sessions. So you got to understand, first of all, a sound strategy. You should have a sound strategy for yourself. Number two and number three. So there are three things which I will encourage you to have if you want to become a serious trader. One is your sound strategy. Some sound trading strategy, not sound strategy. A sound trading strategy. And number two, you should have something called risk management training. So you should understand risk management. And number three is psychology, trading psychology. So these are the three important things if you want to become a lifelong trader. You want to have a trading career, then you want to focus on these three things. Okay, Saeed Alvi, hi. Fahim Desi updates, sir. Okay, so news trading. Okay, Fahim ji, we will have a class on news trading. No worries, we will have a class. We have actually, in fact, we are hopefully gonna have a full course on news trading, which we will have probably a month from now or something like this. Okay. Can you tell me title of sound trading strategy? Yeah, sure. Please go back. This is webinar number 5. So can you please go back to webinar number 3 and 4, because that's where we have discussed our strategy, trading strategy. So we discussed our trading strategy in webinars 3 and 4. So if you can, please go to that video 3 and 4. Okay, so let's go ahead now and discuss our today's contents. So first of all, we are going to discuss something like lots and pips. What are lots, pips, and points? We will discuss all of that. We will discuss something like the size of SL and TP. Of course, that depends on your account size, but you got to understand that the size of SL is extremely important, and you should be able to calculate the size of your SL. If you cannot calculate that, no problem, because we are gonna have that calculation today. And number 3, We will also discuss how many lots you should trade. What do you mean by risking an amount? This is a very important question. Himatari ji, thank you for coming. Hi. So this is a very important question. What do you mean by risking an amount? When you are risking something, what do you mean by that? Okay, so FIMG is saying background, SR, trend line violation, reference line, entry bar. Yeah, that's it. That's right. Very right. That's our strategy, FIMG. That's our strategy. Please stick to that strategy and follow the risk management guidelines which I'm gonna share with you guys today. So please take care of your risk management, because if you don't take care of your risk management, you are surely going into disaster. You are gonna blow up your account. The next thing is R. What is an R? R is a risk reward ratio. RRR. Sometimes I have put SL, market hits and then market rebound. Yeah, that I know that. I understand that. Don't worry. Today we will solve that problem of yours. Hi sir, I'm a newcomer. I joined 2 days ago. Thank you for coming. Radhiji, thank you for coming. And the next one is how many R's you should target. So let's go ahead without any further ado. So what are the lots and pips? Let me show you the lot size and pip size in our very own OctaFX MT4. So this is the MT4 of OctaFX. This is where I'm writing 1 or 2 or 3, whatever you write over here. That's what a lot is. So when you trade one lot, that means you put one here and you buy or sell one lot. That's how you are gonna put your one lot over here. The next thing is, if you wanna put smaller than one lot, what do? You put 0. Let's say 0.5. So that's how much? That's half a lot. That's half of a lot, half of a standard lot. So you just put 0.5. You wanna reduce your position size, you can go down to 0.1 or something like that. You wanna go still smaller, 0.05, or the least is 0.01. So you go back and put 0.01. So that's how you put the smallest possible lot size. So let's say I wanna buy 0.01 lots over here. How do I do that? Okay, so let's go for something like 0.5 lots. 0.5 lots. Okay, so if I buy 0.5 lots over here, my SL will be below this line. So this is the line where I have bought, right? Let me go to 1 minute time frame. This is 1 minute time frame. So I made my buying decision over here. Now I wanna put my SL. So my SL should be lower than this level. And if you put your SL, if you put your cursor on the SL, it will tell you how many dollars you will lose if the SL is hit. And you put your TP by dragging and dropping it above your line of buying. So for example, we have bought over here, right? So if you drag and drop from this point, that's what your TP is. Okay, so Faiz Khan, what is bar by bar analysis? We will have a webinar, a separate webinar on bar by bar analysis. Don't worry about that. I will tell you also about pending order, no worries, because that's part of risk management. So okay, let me just tell you over here what's a pending order. So you will go to this MT4. In MT4 you go to new order, you put new order, and then this is market execution, right? So you just go to pending order and then you can put buy limit, buy stop, or whatever. But if you buy somewhere, you will have to specify the price. So you will have to tell it at what price do you want to buy or sell or whatever. So you will have to put the price in. Okay, so that's very simple. I think that's very easy to understand. That's how you put a pending order. And we'll get back to it in the end of the webinar one more time, because we have so much to discuss today. So I will go ahead and we will discuss the things which we want to discuss. Okay, so are pips really valuable? Very important question. What is a pip now? A pip is the smallest possible change in the price of this asset. So for example, if my pips from here to here are how much, you can calculate that thing over here on this. So for example, we have bought at this price, right? We bought at this price and the SL is over here. So how many pips away is it? Well, you can calculate that. That's what a pip is, right? A pip is the smallest possible change in price. It's the smallest possible change in the price of a Forex asset. Faizkan, sir, your strategy is awesome. Okay, thank you, Faizkan. We will have more webinars on our strategy, so just stay with that. Sir, I want to learn from the scratch and need to attend lectures from beginning. How much time is required for beginners? How much amount is required for beginners? Well, Khalid Saab, it depends on you, but personally I would say that you should work hard and attend all the webinars of OctaFX. Then you will learn quite a lot of things from our webinars, from the webinars posted on this channel. So just keep following those webinars and you will learn lots of things. Okay guys, so you can see that I just put half a lot over here and the SL got hit. So we got a loss. We got a loss of how much? We can check it in our account history. The loss is $51.5. No problem at all, because we are going to get this and more in our subsequent trading endeavors. So nothing to worry about. And remember, today there is a news of USD CAD. USD CAD is Canadian dollar. So this is the news. The news is gonna be announced just around 15 minutes from now. So we are gonna get ready also for that. So now let's go to our slides. So a very simple thing is that the pip is the smallest possible unit, smallest possible change in the price of an asset. So for example, if I think that the market is going to go up from here, how many pips do I expect? Well, I can calculate that, but it's not necessary, because in a while I will tell you how to do that. So for example, I put my stop loss over here. I will put my stop loss over here, right? I will put my stop loss over here. If I buy at the current market price, I will put my stop loss over here, and probably I will put my TP over here. So that's how you put your SL and TP if I buy here. Now, what's important is that you calculate the pips from this level, from the current market level, all the way down to this level. So for example, if now the pips are so let's look at the number. The number is 1.36345. Well, it's changing, it keeps changing, but you can just catch a glance of one number, and then you can calculate that your SL is how many pips away from this point. Pretty simple. And then you have the TP, which is how many pips away from this. Now, what is the appropriate way of thinking? Do you think pips are necessary? Well, actually the pips are necessary only and useful only for swing traders, not for day traders. And as you know, there is a difference between day trading and swing trading. Swing trading is when you trade on a larger time frame. So for example, if I wanna trade over here, let's say I wanna go for US 30. That's also one index available on OctaFX platforms. So let's say if I wanna buy at US 30 and I wanna do this trading on hourly time frame, how do I do that? Well, I just go to 1 hour time frame, and I can see that this is the index, right? So this is the index US 30, Dow Jones Industrial Average. So that's how you do your trading on this. So if I, for example, if I think that I should buy over here, I should have bought over here, well, then my SL should have been here, and my TP, let's say, should be around this level. Now, if you pay attention to this thing, this way of trading, you will understand in no uncertain terms that it's not necessary. It's actually really not necessary to know the pips, to know the number of pips which you are gonna risk. Actually, it's more important to know the dollar amount which you will risk. Let me show you how. So for example, if I want to buy over here, what I should do is 0.01, and if I put my trade over here, I will drag this downside to the downside over here, and this way I can know how many dollars the SL is. So you just put your cursor on the SL and it will show you, it's showing how much? It's showing $0.92. So if the SL gets hit, then I will lose $0.92, and I can move this to the upside and know how many dollars I will gain if I put my if my TP gets hit. So that's how you can easily calculate. You actually don't need to know the number of pips. Pips are only there for the sake of calculation. If you become a swing trader, which is a whole lot different game, and let me illustrate that thing. So for example, you want to buy over here, all right? So earlier there was a student who asked me about pending order. So let's say I want to buy, and I want to buy a little bit above the current market price. So let's say I want to buy over here, okay? So I will put pending order, and let's say I will buy one lot, all right? And I will put pending order, and I will put buy stop, and then I can just put the order, place the order. Okay, it's not working because the market is already there. Okay, so let me move the market, let me move the order a little bit above. Okay, so how much the price? You can look at the price, 1.1.3641. so that's the level at which I want to buy. Okay, so if I want to buy over here at that level, what is the correct way to do that? Well, if I want to buy over here, it's much better to put an order which is something like this. So let's do it again. So you should take buy stop, you should put pending order, and you can put the order over here. Yes. Tarseem Singh ji, yes, that's right. Actually, the spreads will affect SL and TP, but it's not something to worry about. So don't worry about that. So I just wanted to show you that you can calculate the pips, but pips are not really valuable. What's really valuable, what's more actually valuable, is the dollar amount. Let's say I want to buy over here and I put my SL over here. It's important to know the dollar value of SL. So for example, that's how much? 1.45, and my TP should be, let's say my TP should be around here. So how do you put your TP? You put your TP by dragging it above. So now you can look at this. You can look at this 3.72 and how much? 1.45. That's it. You just need to know that. Just make your job easy. The next thing, the size of SL and TP, as we discussed. It's very important to know the size of your SL and TP, because that's how you decide. And the size of TP depends on the size of SL and TP, actually both depends on two very important things. Okay, so the question is, sir, which day trading, which time frame is good for us? I think 5 minute or 15 minute is gonna be good for you if you want to do the day trading. But for the beginners, I will recommend swing trading. That's much better. Currently, I am very experienced in the markets. I have been trading for quite a long time, but I still do both the things. I have two portfolios, swing trading and day trading portfolio. I have two portfolios. So Alviji, for you, if you want a day trade, then go to 15-minute time frame or 5-minute time frame. If you want a swing trade, then go to 1 hour or 4 hour time frame. So let's get to it, guys. I was saying that if you want to buy over here, now if you look at the SL, it's how much? It's 1.45, right? 1.45, and the TP is how much? 3.71. So SL and TP, the size of these both things, it depends on two things, as I said. One is your SL depends on the distance from the entry point, and number two, it depends on the position size. So for example, if I want to buy over here again, and let's actually do it, look at this, the SL, if I put the SL almost at the same point, this SL is different, it's 2.19. Yeah. ARM293G, you're right. Your SL should be below swing low if you buy. And your SL, if you sell, your SL should be above the last swing high. That's it, very simple rule. So you see, SL depends, the size of SL, the amount of SL depends on two things. One is the distance, how much far away is your SL or TP from the entry point. So now you can see we have two entry points, right? But the position size is same for both, right? So even though the position size is same, but you can see the position size is same, but even then the SL and TP sizes are different. Why are the sizes different? It's because the distance from entry point for these both is different. Let me illustrate how. So now I want to buy more. Let's say I want to buy how much? 0.5. And now you can see if I put my SL at the same point, at almost the same point, the size will be much bigger. Let me show you how. So first look at the SL size. First look at the TP size. I'm putting my TP, my cursor on the TP. It's how much? 3.71. The second TP is 2.77. And the third TP is how much? 140.63. Why is there such a huge difference? Well, let me make it a little bit more clear. Now you can see that both the SLs are almost at the same distance from the entry point, right? And the entry points are also almost the same. But you see the size of first SL is how much? 2.18. The size of second SL is $108. Why is it so? When the distance is equal, your position size becomes the determining factor for the size of your SL or TP. I want to say that if your position size is different for two trades, their SL and TP will be extremely different. And similarly, if your distance from the market is different, but you have equal position size in two trades, then the SL and TP amount will also be different. So it depends on two things, as I said. Which two things? It depends on the distance from your entry point, and it also depends on the lot size of your TP or SL, both. So it depends on these two things. That's why if you wanna become a successful trader, you know your SL should always be very, very small. It should be as small as you can be comfortable with. If you are comfortable with an SL of, let's say, $1.2, $1.5, just for example, if you are comfortable with the SL of $1.5, then your position size should be very, very small. Don't compromise the distance, compromise the position size. That's much easier to do. That's much better to do actually. And why and how to put the SL and TP, that's very easy. I already explained that thing, right? So now let's go to our news. You can look at this. The Bank of Canada, BOC, is gonna announce their rate, BOC rate statement. Just a few minutes, rather 2 minutes from now. So let's go USD CAD. This is the Canadian dollar. And so guys, do you think we should sell or we should buy? Do you think we should sell or buy? I think first we should buy. So what I will do is so this is USD CAD and I will go to 5-minute time frame, and I think this can be a good buying opportunity. So let's get rid of our trades and focus on our news trading. So I will go to 1-minute time frame, and I can see that there is a lot of strength in the market. The market is unable to go down from this point. Praveen ji, you are late, no problem at all. Arm ji, we will discuss our strategy in a short while. Please give me a minute on that. Because now we are trading news. Okay, so is it time to buy? Not yet, because we are gonna buy in a short while, and now I think is the time to buy. So I will buy over here. I will put my SL at this level, and I think the TP should be, for TP we'll go to 15-minute time frame, and I think I will put my TP somewhere around this level. So this is how much? 179.54. the TP is 205. Okay, so it went down. So if we sell over here, we sell 2 lots, we sell over here, then it can go down further and the TP will be hit. So let's go ahead and let's focus on how we did it. So you can see that if you want to put your SL and TP in the market, it's very important that you know both the sides of the market. You want to know what happens when you put your SL. The amount should be known, and you should also know the TP amount. That's how you do it, right? Okay, so we already did the calculation of SL and TP. So how much lots should you trade? That's a very, very important question. Okay, the market is going down, and hopefully the TP will be the TP got hit. We got our TP hit. So how much did we earn from the TP? $87.53. Okay, that's it. That's good. That's good enough. But we also lost some amount, so no problem at all. This was just a demo trade, so nothing to worry about. But I just wanted to show you that you can put your SL and TP amounts when you are doing something. So let's say you wanna sell over here. If you put your SL above this level and you put your TP around these levels, you can calculate the risk reward ratio, and that's something which we will discuss today. So for this trade, for example, this trade gives you a risk reward ratio of how much? 5. Okay, Raj Boy ji, I will take your question in a little while. You see, nice sell. Yeah, it's a very nice sell. So we sold it and the TP got hit in a short while. I think it was within 1 minute. The TP got hit, and we earned around $87 for this trade, for the next trade. Okay, so if you sell over here, and your SL is around this level, your TP is around this level, then you get how much? 5 risk reward ratio. In terms of R, you gain 5R. Now what's in R? What's in R? R is the risk reward ratio. Risk reward ratio. And what's in R? Actually, it is the amount of the amount of SL expressed in terms of. So as I told you, if I put my TP here, I'm getting how much? 5R from this trade. In the same way, let's say I wanna buy over here. Now why do I wanna buy over here? Well, according to our strategy, which I already told you, it looks that this should be a buying opportunity, and we should exit over here because this is an ND bar, something like an ND bar. Okay, so this one right here is the no demand bar. So Rajboyji is asking, sir, identify ND bar. Rajboyji, this is the ND bar. Small volume, look at the volume. I will put a line through this so you can see the volume is less than previous 2. Actually, this is less than previous 3 volumes, but if the volume is less than previous 2 bars, then you are guaranteed that this is a no demand bar. And if you sell at no demand bar, you see the market is going down. But well, I'm not discussing no demand bar currently. I'm just discussing how much you will gain if you buy over here. And you put your SL around this level, you put your TP at this level. Your TP gets hit and you get how much? You get 2.77. Rashid Zamirji, welcome to this webinar. So we get how much? 2.77. And what's the meaning of this? 2.77, the risk reward ratio R is 2.77. What's the meaning of this thing? What's the meaning of this number? 2.77. Well, the meaning of this number is that if you risk $100, you get how much? $277 from this trade. And similarly, if you risk $1,000, you get $2,770 from this trade. So simple. And similarly, if you risk $50, you earn how much? Well, you can multiply 2.77 times 50. It will be something like $143, something like that. I'm not sure, but just my mental calculation. If you risk $50, that's how much you will earn. Maybe 143 or something like that, 142. Malik Asadji, thank you for coming. I'm great. So let's go ahead now with this and discuss. So discuss that our risk management strategy should be built around our SL, not our TP. Remember, our risk management strategy should be based on SL, not TP. I repeat it again. You should first decide how much you wanna risk, and then, only then, you can get to know how much your TP will be. So let me give you an example. Let's say your account size is okay. So let's look at US 30 first. So we will do all these calculations there. Okay, so we will go to 1 hour time frame because okay. So let's say your account size is $1,000. All right. If your account is $1,000, for GBP USD, how many lots you should trade? Let me give you one more data. Okay, point A is your account is this much. B is you wanna risk 5% of your account. Okay, this is a simple idea, isn't it? So I'm asking again, if your account size is $1,000 and you wanna risk only 5% of your account, how many lots of GBP USD should you trade? It's a very important question, because if you know how to deal with this type of questions, you can very well understand the risk management, the ideas of risk management. And what do I mean by that? By this, I mean, first of all, so let's do the calculations. Okay, let's do the calculations. So now over here, I will do the calculations with you guys. Let's do calculations. And believe me, the calculations are gonna be very, very easy. Borkar Ji is saying 0.5 lots. Okay, let's see. Said Mohammad Ji is saying, Salam sir, USD CAD news before 2 bars in ND bars, right? Yes, I think you are right, Said Ji. You're right, you're right. So now just look, let's focus on this. Let's do the calculations. So our calculations are 50 lots. No, I think that's too much. So you want to risk how much? Oh yeah, I understand that. So you want to say that you only want to risk, how much, right? So that's $50. That's right. That's right. $50 is right. But why do I say that you want to risk $50? Why? Because $50, if we do the calculations, 5% of 1,000 is how much? $50, right? So first of all, you want to know that you cannot risk more than $50 on a single trade, right? Okay, that's it. We know that now. And what else? Now after this, oh yeah, that's right, $50. 5% is $50. That's it, right? But then, how many lots should you buy? Well, according to my experience, if you follow my strategy on 5-minute time frame. Now remember, this is going to be different for a swing trader. If you're a swing trader and you want to put your trade on what? Let's say you want to put your trade on hourly time frame, then your risk parameters will be totally different. Your risk parameters should be different if you want to put your trade on hourly time frame, or let's say daily time frame. But if you want to put your trade not on hourly or daily time frame, but you want to put your trade on rather 5-minute time frame, then my experience shows that normally the SL is $50 for 0.8 lots. If, let me write, on 5M time frame for 0.8 lots, SL is $50. You should trade how much? 0.8 lots on 5-minute time frame. That's it. Very simple. Thank you, protocol bloggers. Thank you for watching from Nigeria. That's amazing, isn't it? But if you want to buy more than that, you will be violating your risk management criteria. So what you should do is, first of all, you should focus on what? On the SL amount. So let's say you wanna trade on hourly time frame. Then what should you do? If you want to trade from on hourly time frame, then you should reduce your position size, your lot size. Simple. If you want to go on still higher time frame, which is, let's say you want to trade on daily time frame, then you should trade still smaller positions. The positions should be much smaller than that. Okay, so the best time to trade is the London session, the opening of London session and the opening of New York session. The London session starts at 8 a.m. in the London city, and New York session opens roughly around 1 p.m. in the afternoon in London city. So let's go back to our slides. Now I just wanted to say that you should trade the lots based on what? Based on the entry point and also based on your position size. So let's go back to, let's say, our hourly time frame. There is this downtrend, right? Now there's nothing to do over here. I just wanted to show you that if we go to 5-minute time frame, now if you think that a buying opportunity is emerging, how many lots should you buy? Let's buy 0.5 lots and see if the SL becomes around $50. So let's say I buy over here and I will put my SL somewhere around this level, right? So you see the SL becomes 78.65. That's because it's volatile time. The news has been announced just recently, so the volatility is very high and the bar sizes are very high. So we should get rid of this trade as soon as we can. So we are earning how much? $34.37. Okay, so I will close this on a profit of how much? $17. Okay, $17.63. We earned $17.63 from this. Let's go to our GBP USD. Let's say I want to buy over here because I think the market is going to go up. For example, okay, so if the market is going to go up from here, then what should I do? Let's say I will buy over here and I'll put my SL below this level. I want to get rid of the volumes. So I'll put my SL over here. Again, the SL is how much? $77, which seems to be too much. So I can reduce my position size. How do I do that? Well, you can scale out. You can take partial close. So let's say I will double click on this, and this is how much? This is 0.5 lots, right? So I can, let's say I can close 0.2 lots. I can close 0.2 lots over here. When the market goes slightly in my profit, I can take 2 lots out and then let it run. You can do that while the trade is going on, either in loss or in profit, whatever. But you can do that. So let's close the market. Let's close this lot size, and we earned some profit, right? And now we put our TP. So if I put my TP around this level, then my TP is how much? 56, and the SL is how much? $52. Still good, but not very good. So what should we do now? Well, we should look for the trades whose risk reward ratio, okay, we earned more from this trade. We should look for the trades whose risk reward ratios are good. And how to do that? For this, I will tell you to take care of what? To take care of your risk reward ratio. First of all, as I told you, I hope you understand that R is the risk reward ratio. That means if you risk $50 and you earn somewhere around $100, let's do that. You risk $50, you earn 100. How much is your R? Can you do that? Can you do this calculation? Your risk is how much? $50. And your reward is $100. How much is the R? Well, it's pretty simple, isn't it? The R is 2 on this trade. Why? Because it's simple. You just divide the earning amount by the risk amount. And the most important question of today's webinar is, what do you mean by risking an amount? Yeah, Freddie Pescio is Freddie G. You're right. It's 2. What do you mean by risking an amount? What is the meaning of this? If you say that I'm risking, let's say, example, you risk $50. What's the meaning of that? What's that? What is it? It means your SL is at $50. Simple. Your SL is at $50. When you say that you are risking a certain amount, when you are saying that you are risking a certain amount, that means your SL size is that amount. So let's do this, do the same thing again. So now, for example, let's say I buy over here and I put my SL just below this level. So how much is the risk? The risk in this trade is $95, $95.5. Vinod Kumarji, very good evening. Thank you for coming. So the risk for this trade is how much? $95.5. Why? Because you can see that you have risked how much? $95 in this trade. Okay, so if you are risking $95 on a single trade, that means your risk amount, your SL amount is this much, 95. Now the question is, if you want to risk $95, how much do you expect to earn? How much do you expect to earn? If you are risking $90 but you are earning $60, that's not a good risk reward ratio. That's not a good R. Risking $90 and targeting $50, it's not a good R, isn't it? It's not a good R. Why? Why is it not a good R? Because you are risking more than you are targeting. Yeah, that's right. At least you should get 90 plus 90. So you should get at least, okay, I will say 1.5. So 1.5 R, at least 1.5 R. So how much is the 1.5 R for this amount? It will be $135. For this trade, the R will be $195 if, okay, so at least $180 will be good, but I'm saying you can at least target 1.5 R, which is 1.5 times the amount you are risking. So you are risking, let's say $50, you are earning $75. If I start my day before 1 hour, London open, okay, yeah, that's good. So if you start trading 1 hour before the London session, that will be good time. But you can do it on 3 minute and 5 minute, but it requires a lot of experience. So I will not encourage you to do it on 3 minute and 5 minute time frame. I will tell you that it's better. It's much better and much easier for the beginner to do the trading on hourly time frame and 4 hour time frame. Thank you so much, Vinod Kumar ji. Thank you for your comment. Thank you for your kindness. So I already discussed that an R is a very important thing. If you follow high R trades, then you are in a good shape. Now, how do we get high R trades? How do we get it? One way to get good high risk reward ratio trades is to target the edges of the market. What do I mean by that? Edges of the market. You see, the markets are just like this. Like this. So the markets move like this, right? So it goes up, it goes down, up and then down, and goes down, and then it goes up to this point and then down. So something like this. The market moves like this, right? So I will tell you to trade only around the edges, only on these levels, only on these levels, because these are the edges of the market. These are the market edges. And you should also sometimes trade around these levels. These are the points when the market is turning to the other side. That's when you can catch the trades with very high risk reward ratio. Let me give you an example. Now, there was a student earlier who was saying, sir, please re-summarize your strategy one more time. So, okay, I'm gonna discuss my strategy over here. So guys, please pay attention. How to find the edges? That's a very important question. That's what I wanna answer. So our strategy is when you have trend line violation and the reference line, in the reference line there should be some buying because you wanna buy over here, right? So you wanna buy over here, you look back, the reference line, look back. What do you see? You see some buying, right? So you see there is a lot of buying over here. What you will do now is you have checked the RL, the reference line. You have checked, you have seen that the market is also on what? Also on a support level, right? The market is on a support level. The support is around here, right? This is the support level. So the market is on support. The trend line has been violated because this is oversold, right? This is slightly oversold, isn't it? It's oversold. Actually, you can also make a trend line over here, but it will be very strange. So I don't want to make it. You can make it like this also. So let's say we make a trend line like this. Orange, clone it, and you can put it down over here. You can see that this is oversold, isn't it? Okay, that's great, Vinod Kumar ji. That's great. I'm very happy about. I'm very happy for you. You are earning profits. That's great, wonderful. So there is this trend line violation because the market is going down and it is oversold in the trend channel. The market is on support. And you see this bar right here is no supply bar. It's entry bar. It is no supply bar, right? It is NS bar. So you just buy over here because it's on support and it is also showing a lot of strength. The market wants to go up from here. And then you see how the market has shot up. And how much did you earn? You earned around 8 risk reward ratio, 8 times the amount you risked. Debnath ji, thank you so much. I love you too, Debnath ji. Thank you for coming. So you see the risk reward ratio for this trade is so high. It is so really high because you are trading around the edges. Now let's put a trade not on the edge but in the middle of the edge. So let's say you wanna sell over here. Now remember, this is not on the edge. Okay, so let me make it still worse. This is a very bad entry, isn't it? I just wanna show you the example. If you sell over here on this bar, you will put your SL at least on this level, and then you will be afraid whether it will go down or not. So you see, because the market is unable to go down for quite a while. Your strategy works in indices also. I have earned a few thousand rupees today. Thank you for your nice strategy. Thank you so much. Thank you so much. Satpathy ji. Yeah, the strategy is good. If you practice it, I think you can become an excellent trader. Explain about exit. Okay, I will explain also the exit strategy. But first, let's focus on the entry. Okay, so the entry is, this entry is very bad, but this entry is very good. Why? Because this entry is on the edge. So you wanna take this type of trades, not this type of trades. You wanna take this type of trade. So I wanna make it green. You should take this type of trades, not this type of trade, because this type of trades are very bad trades. Don't take these trades. Okay, so Saeed Mohammed ji is asking, sir, please explain some entry bars. Saeed Mohammed ji, we have already discussed the bars. The bars are 6 type of bars. I will say there are 6 entry bars. Okay, 1 is spring, 2 is upthrust, 3 is no supply, 4 is no demand, 5 is, and then you have 6. 5th one is bag holding, and 6th one is end of rising market, ERM bar. So these are the 6 types of trades, entry bars. Remember guys, we wanted to buy over here and it is going in our favor, isn't it? It is going in our favor. This is working, the strategy is working. But now you also want to focus not only on strategy but also on risk management. Now, first of all, what is an R? We already discussed. Why R matters? I already told you. How to get good R trades? I already told you. Okay, so Shantanu ji is saying that he earned a profit of $15. That's good. That's good. I'm so happy. Yes, Vinod Kumar ji, you should always tread around the edges. So we were discussing, is 1 hour enough? I think 1 hour is not good. You should target more hours. 1 hour is not enough. Okay, Saeed Mohammed ji, let me explain the exit bars, because this is a very important question. It's a very important question. So let's discuss the exit bars. Exit bars. After buying, you should exit 8. You should exit 8. So number 1, 8 major resistance. Number 2, when you see a no demand bar. Number 3, when you see end of rising market bar. And number 4, when you see a UT bar. This is when you wanna exit. Run away from the market. So you can exit at these levels. Okay, let's go back to our discussion. So I already explained how to put R's for partial exit. So let's say you want to, okay, so we do you guys remember we put a trade over here and we put our TP around this level. The TP got hit. Let's say you wanna sell more over here. So let's say you wanna sell 0.03 lots. Okay, now we already discussed that you should take partial close whenever possible for you. So if this is a sell trade, so how do we put our SL? We will put our SL by dragging it above. So SL is 2.67. We should take a partial close if we want, but we can also put our TP just around this level or maybe around this level. So can you guys calculate the R for me? The SL is 2.76. The TP is $5. 2.7 and $5. So let's also take the partial close. Remember, we are running in profit. So if we want to take out some profit, we can book our profit by, let's say how much? 0.02. Let's say we want to take out 0.02 lots. So we already took our partial exit and now the market is going still in our favor. If the TP gets hit, we are a bingo. But remember, now the TP will be smaller and the SL is also smaller. Why? Because we already took out the partial closes. Thank you, sir. You are the best teacher in Octa. Thank you so much, Saeed Mohammad ji. Thank you. Yeah, Freddy ji, you are right. 1.5. The R for this trade was 1.5. That's right. Completely right. Okay, guys. So let's go back to our discussion. We already discussed. So I have a small announcement to make. Malik Asad ji, it's 1.5 R. Do it again, please. So there is an amazing announcement from OctaFX team. For end of the year, you are gonna get something amazing. First of all, for the new year, there are 3 things which are gonna be amazing for you. The deposit will be doubled, and for doubling your deposit, I'm gonna give you the code, the promo code shortly. I'm gonna give you the promo code. Just wait for a while. The leverage is gonna be up to 1,000. The spreads will be lower by 15%. So we will reduce our spreads. Remember, the spread is your cost. So we will reduce your cost of trading. And for the new year, more things. This offer right here, this offer is only valid up to 26th of December, guys. 26th of December. If you just trade one lot, you will be eligible for a draw of $2,000 of merch from our OctaFX team. If you trade 3 lots, you will be eligible for an iPhone or MacBook, and again it will be a draw, right? And if you are able to trade 5 lots, then you will become eligible for a draw of 1 iMac from OctaFX. So hurry up, guys. What are you waiting for? Just put your lots and become eligible for all these prizes. These amazing gifts will be only available for you if you trade up to 26th of December. Remember that. After 26th of December, the prizes are gone. So you want to grab a piece of prize for yourself? Just go ahead and trade 1 lot for $2,000 worth of merch. Trade 3 lots and you become eligible for a draw of iPhone or MacBook. For 5 lots, you become eligible for iMac. With this happy note, I thank you everyone for coming over here. And now I will give you the promo code. Now you can see that if you just double your amount. You just want to double your amount. You make a deposit of, let's say, $1,000. The counting started from 28th of November, Freddy G, 28th of November, and it will go on to 26th of December. So let's go back to our promo code. When you are depositing your amount, you can use this code Saeed100. If you put this code when you are depositing, your amount will be doubled. And by the way, this is only available up to 31st May 2023. You make any deposit and you get double of that. So with this happy note, I will leave you guys, and thank you for coming, everybody. The next webinar, we are going to discuss trading psychology. Until then, take care, goodbye, and good night.